Welcome to the Hedgineer podcast with your host, Michael Watson.
Hedgineer.
Hey everyone, and welcome to the Hedgineer podcast, where we discuss AI, technology, and data for hedge funds, asset managers, and prop trading. My name is Michael Watson, and I'm the host. And today we have a special guest, the Chief Data Officer of BAM, aka Balyasny, Carson Boneck, here on the podcast. Carson, really excited to have you here.
Mike, it is great to be here. I've listened to all your podcasts. I'm a big fan. I have my team listening to your podcast, so it's a real honor to be in the seat.
Honestly, that's an honor. Appreciate that. So when I have a new guest on the podcast, one of the things I love to do is have them walk through their career path and how they ended up being in such an illustrious seat as the one that you're in today. So how did it all start?
A lot of serendipity. Mm-hmm. So I might be a little older than you, and started off coming out of school, classic kind of finance background, and went into the management consulting track, but was in Chicago, and it was a bit of a unique spot. There was obviously one big hedge fund starting up when I was kind of coming up, and found myself after 4 or 5 years switching jobs and going into quant research. So in the early 2000s, late 90s in Chicago, there was like a burgeoning scene of these small startups trying to address this growing quantitative finance thing. You had folks like Starnmine, Joe Gatto's team building all those smart estimates. You had Bill Aronin and guys building Market QA, which Thomson Reuters ended up buying and became their like data, their Market QA platform became QAI, their big data delivery platform. You had Holt, all the members, the H, the O, the L, and the T of Holt were in Chicago. And then they got, partnered and bought by Credit Suisse. And I was working at a firm called Chicago Investment Analytics. And we had a FactSet feed. We had SPSS, and we were doing quant research. We're building stock selection models, building some factors, writing little research briefs on, decile spreads and the like. That firm got bought by Charles Schwab, became the underpinnings for all of the Schwab-like equity ratings. They decided to start talking to Chuck again, shut that business down. I went to another startup that was also in Chicago doing similar kind of things, building factor libraries for hedge funds. And love that, And I think what I loved about it was, one, talking with the investor, understanding how they're trying to apply it, then being able to sort of go back on my own, tool away, talk to great PhDs or whomever that. But being in that sort of research environment was really, I was really enthused by that. Ended up making some connections in that last firm with some other startups, one of which was a firm called Clarify, which you might recall was like this kind of alpha testing, visual query language based thing where you kind of drag and drop transformations and do quick optimization and basically get to a trade list for an equity portfolio. Became best friends with the founder of that. He sold his business to Cap IQ. They said, hey, why don't you come over here? We got a lot of data. We have now 3,000 people in India collecting data. We don't know how hedge funds use this or really investment managers use this because they're founded by bankers. And I started basically, it was like a little quant research data science team. And that then through a lot of corporate change, the selling of the business, I found myself sort of managing a portfolio of tools and teams, and spent a good 7 years there, kind of getting my post-grad in management, a little bit of bureaucracy. Sure, I had a big company dynamics, and then joined Balyasny initially to create a quant research team for the long short business. That was the predominant business at the firm at the time. And they had really started to invest in more systematic trading strategies, had several positive portfolio managers who were coming in They also, at the time, we were starting our first sort of foray into stat art proper. So I came in and quickly realized that there's a big opportunity in data. And, I needed data to do my day job. And then all these other folks needed data to do their day jobs. And so I always tell the story, like I found myself in this room with my boss, who's the president of the firm, Taylor, and Dimitri, and these heads of the groups, our CIO at the time and things. And it was one of those moments where I kind of was like, I'm either going to come out of this meeting with a job, or I'm going to come out of this meeting with a hard conversation, which happens at hedge funds. And so kind of got this battlefield commission, as it were. We were starting this stat art business. They're huge consumers of data. Where's my 500 data sets? And, was asked to be the chief data officer of the firm. Started with 2 or 3 people that were kind of floating around different teams, and spent the next 18 months really just trying to provide the information needed for that growing stat art group. And so, that looked a lot like building core infrastructure. We had a lot of things to build. We made a hard cut to the cloud. Like it was a greenfields opportunity. So we didn't have any of the tech debt to have to migrate or to navigate. And so we were able to move really quick, and found myself hiring great folks from outside industry. And pretty soon there, we ended up satisfying the needs of that business. And so, 18 months later, being in that same room with those same folks, I remember the head then of the stat art group saying, okay, I need Carson to slow down the data. We've got the data. That's not the issue anymore. We're good. We got that. And I recall a little fist bump under the table. And I was like, okay, we've done it. We've proven that this can work, and, our value there. And then fast forward 5 years, and we're a team of about 150-ish, roughly. Centralized team servicing all the strategies of the firm. So that's long, short, systematic, macro, commodities, credit. We have a privates business, a growth equity business as well. We obviously are tight partners with our technology team. We give them what they need, and they ask us to do things too. And more recently, having built some of the foundational things, we, spun up last year an applied AI group, and have a lot of data scientists that you would be familiar with from your past lives, working with folks who are industry experts or sector experts, kind of that 5 tool players who can talk to a PM or an analyst, and know how to code, and can sort of bridge the gap between data and maybe investment VCs. And, but yeah, I would, none of that was planned. And so I always tell folks, my philosophy has always been, if a door opens, I'll walk through it. What's the worst that's going to happen? I'm going to find that a year later, I learned a bunch of things. It wasn't for me, and I'm going to want to walk through a different door. But that's my story. And I think it's continued to serve, I think, me well and our team well, because even last year we had about 19 people transfer from our group to investment teams. Those doors have opened for them. Walk through it.
So Carson, that's an incredible trajectory. There were at least 5 different things that you touched on there that I wanted to immediately go into, but then you said something more interesting after that. One of the things that I picked up on is that you were thrown a really hard problem to solve. You have a huge demand for getting data into the firm. 100, 200, 300, 500 different data sets that the investment teams need. And when you get to a point where they're saying hey, we're good. We've solved a lot of the data ingestion problem. There's other issues that we need to focus on now. Can you touch a little bit on what those are?
Yeah, absolutely. And, I think, I don't know what your experience has been like, but certainly in our case, I always believe that you've got to get a lot of those fundamentals right first. So if you think of the evolution of a data team, it is going to start with ingestion and high quality data. That's where it all starts. If you don't have that, you're not going to be able to move up the value chain, right? And even within our team, we talk about going from foundational to operational, to differentiating to transformational. Like those are the 4 stages of growth that we have within our team. And, we're building new businesses. And so each of those businesses follows that path. We want to follow that same path. And so we're always in one of those buckets, as we expanded beyond just getting, a bunch of data for the StatArb folks and going into commodities. We started foundationally. Okay, weather data, huge data set. Hexagons, real time, petabytes of data, right? How do we query that? How do we deliver that? How do we work with the meteorologists that are being hired on the teams themselves, right? To build those things. So foundational and operational, you kind of start there. And then all of a sudden you're starting to think about, we could marry weather data with 3 or 4 other things that we see in equities and sort of bring that together. And one of the unique things about working at BAM is the assets that we have within house are public to everybody. So, we keep it's closely held if you're a portfolio manager team, what you're specifically using. But the fact that there's data at the firm, we want everybody to know that, so that when we're bringing in data or we're leveraging, the classic credit card data or geospatial or, all the retail and consumer kind of data sets that have been around for 15 years, that's there alongside all the weather data, alongside all the macro data, alongside all the credit data, right? That all the private company data, because that'll help, that those help one another. And so, I think what's driving that evolution for us is meeting each of our PMs where they need to be met, and looking for differentiation. One of the things that happened because of the firm's philosophy of transparency was our team was putting together trackers that were drawn from insights from the commodity PMs or the macro PMs or the equity PMs all in one place. Oh, Dimitri's got this idea. Hey, have you guys thought about tracking this? Because we're seeing something over in, the banks. Oh, great idea. Let's add that in. And so suddenly we have this sort of composite tracker of all of these different ways of looking at it. If you were to go to a classic macro PM who's coming from, a single manager, right, trading fixed income or something, they're probably not using credit card data. All of a sudden, though, we can start to draw some, insights from it because we have it in other parts of our business. And so I think that's a real lever for us. But to go back to your primary question, it's really like you got to get the basics right first. We still have issues of data quality. I think we onboarded over 800 data sets last year. Not all of them we kept. We trial them. We look at them. A quant looks at them. I want 50 data sets this month, and I'm going to, machine learning it out, and I'm going to spit out 2 that I want to subscribe to, and I want to, throw away the other 48 or whatever. The pragmatism and humility and grit is what defines data. Like, that's what it takes. And once you have that as sort of your core DNA, then innovation is really amazing because you're coming from a place of knowing what the limits can be, and you're not trying to oversell it. You're not trying to, I'm going to replace you, Mr. and Miss PM, with this great data idea. That's not our job. Our job isn't to replace them. Our job is to empower them. So I don't know. I think that there's, if you were to look at the portfolio of how our team interacts with our investors, you'd find that we have newer businesses where we're still focused on operational, foundational things. We have more mature, older businesses where we are trying to be, shoot for the fences, be transformational, experiment and fail. And I think that's what makes this team in particular really exciting, because you can see all these different things happening all at once, just given the lack of silos and things.
Definitely. And I think the data point of 19 people over a 1-year period moving from a more centralized team directly onto a desk where they're risk taking is a symptom of something going really well when it comes to integrating data scientists, technologists into the team so that they have that pathing and they have that context about what the team is actually doing when they are making investment decisions. Because if they don't have that context, they don't understand the way that this data is being used, that opportunity would never even present itself. But that's a hard thing to be able to provide people in a central team that aren't necessarily on a desk and understand how credit card transaction data might be being used to be able to understand changes in revenue growth or specific products, or how weather data is used to be able to understand its impact on different European or US energy markets.
Right.
There's oftentimes a disconnect there when I talk to an engineer or developer that's working on something that is more data focused and how the data is actually being used. But it seems like you guys solved that to an extent by the fact that you could have 19 people go from a central team onto a desk. Like how do you create that type of culture and dynamic that enables that?
Well, one is you hire great people, full stop. And what I always say to my team is, you don't work for me, you work for BAM. And so at BAM, we want you to grow your career here. You can only onboard data so long till you kind of know how to onboard data. We've built one of the other entry points for our team is we have a data help group. We call it PM Success. And it's like where I would love to start my career if I could go back in time. You get on this team. Yeah, you're basically, dealing with problems a lot of the times. We call it belovingly the hey nerd desk, because a lot of the questions sound like, hey nerd, what's wrong with this? Or where's my data? Or things like that. But in sitting in that seat for 2 years, you've seen so much across the firm. You've seen all of the businesses, the major PMs, what they're using clearly, because there's immediate feedback when something breaks or there's an alert that goes up. And, I think by hiring great people and then approaching talent through a meritocracy and hopefully hiring managers who aren't protective, this stuff just happens. And, it also speaks to, I hope, the fact that in our group, we want to be as tightly coupled to our PMs as possible. There can be disconnects. Yeah, sure. People who are building cloud infra maybe aren't talking to the portfolio manager on a day-to-day basis, of course. At the same time, we look to get sponsorship in advance for things that we're going to build in data science. Our job is not to be a sell-side research group within BAM. Our job is to help drive returns. We've got plenty of sell-side research groups. Our job is to go to the PM and say, like, okay, here's the opportunities we see to differentiate your strategy. We think it's worth investing 3 months, 6 months, a year in building something new. What do you think? And we'll get, 4 or 5 of those PMs to say, yeah, I think we should do that. And that's the kind of things we do. So we try to build for the multi. But inevitably in all those touch points, great relationships get developed and great talent gets identified. And many of them come in with code and do that. So when they see someone who can both understand data, understand a little programming, has a lot of humility and a lot of curiosity, that's a natural place to, they've been trained on how it works at BAM. That's a natural kind of evolution for our team and then for them to ask. It also does, it also looks like when a new portfolio manager might come into the firm, maybe they want to hire a data analyst. We will ask that data analyst, if they can, given their non-competes or whatever, to start before their PM. Come on in, sit with us for 3 months. We're going to teach you where everything is. We're going to tell you where all the bodies are buried. We're not a perfect team. We're not a perfect firm, but we can help you navigate some of those imperfections that we're working on. And so, we'll have a PM that's joining maybe, in the second quarter, have their analysts start with our team in the first, and we just treat them like a data scientist. And hey, you're just going to be in all the meetings with us. You're going to join a consumer team, so you're going to talk with all the consumer, we call them sector data analysts. You're going to be in all those meetings. You're going to go talk to all those, all the engineers that are supporting them, all those data sets. And then when your PM arrives, you're basically rocking and rolling, and I don't know. I find, the talent development aspect of finance vis-a-vis, say, like technology, really lacking in a lot of ways. And I think it's incumbent on great firms to try to build that talent. And when you see talent leave, that you should be celebrating that. Something's gone right. They've developed some new skills. So yeah, 19 is the high watermark. We've had, I think the year prior was 15, and then it was 13, and we've kind of been growing too. So I think the ratio is about the same, but, and I will say that sometimes folks will go to a portfolio management team and they'll realize like the risk reward of that isn't something that they like to sleep with a lot of times. And then a year later, they're like, you know what? I actually like dealing with more than just the data sets that this team is using. Or, boy, I really realize that I don't want to be a quant, and I am not looking to like back test for the next alpha signal, as a full-time job. I'd like to have some variety. And so, we'll also have folks kind of come back to the team. But I always tell them when they leave, the risk, just know the risk reward. Just know the risk reward. There's a higher risk and a higher reward typically there. But yeah, a lot of people take it.
Totally. One of the elements you were touching on is if you have an analyst join a team on centrally before a PM onboards, in order to get that analyst up and running, so when the PM's on looking to deploy capital, they have a lot of the data that they need already integrated into their processes. Yep. And making that faster, PM onboarding is something that all funds are trying to differentiate with. And that overlaps with the topic of AI and how you could make data accessibility an order of magnitude better. Like right now you have this team, the data help team, and the Hedgineer example.
PM success. Yeah.
PM success. Yeah. Let's call it that. But like, there's no reason why 6 months from now, that's not a chatbot that has full awareness of all data sources, the interfaces that your teams need to use to access that in whatever way they want.
Totally.
Excel, Python, Bloomberg, R. It meets them where they want to work at.
That's right.
How are you thinking about the integration of AI, not just within the data side, which I think is probably the biggest enablement element of an AI rollout, but just more broadly at BAM?
Yeah, well, broadly, we've invested in a lot of these things for a long time. Like we've had an NLP team here for many years. And just like even before my role was created, we'd had alt data at the firm for a decade, right? It's not like this suddenly became new, but certainly to your point, over the last 12 months, it's really crystallized in a lot of different ways. And so, we started a applied AI team, which is really like an enablement group. One of the things that we talk about within that team is, we don't want to be the keeper of the list of 500 projects. That's a bottleneck. Rather, we want to like build some of the services. We want to build some of the, the code bases, the Git repo that you can use to build your own chatbot, to build your own thing, to build your own research report analyzer or whatever. So it's a lot of training and a lot of education there. For us, yeah, we've already been implementing AI in that PM success team. So we've got chatbots there. It's not fully to the point where one can just ask the question and get all the answers. There's a lot of indexing still we need to do, but that'll evolve, right? And what that allows, we have bots now where people can ask questions on where data is. Within the team, we have a similarity bot. So if like there's something that comes up, they don't have to suddenly go into like the service desk and try to find, well, here's the answer from 3 years ago on that. It just gives them the answer, or gives them, here's how we approached that with that team 2 other times. This is what the result was. So there's definitely like a large efficiency and productivity at play there. I think more broadly, though, what you're going to find is there's going to be just a lot of assistance being built. And one of the our head of applied AI, Charlie, who's amazing. He always describes it as like we're moving from just models and we're moving into AI assistance. And so that will cover things like we have a data catalog. You can go in right now and you can search for credit card data, and here's all the credit card data. And you click a button and it shows you the shape of the data, gives you all the details. Where is it? What database? What S3 bucket? What do we think of it? What evaluations do we do in it? And if you want to get it, you just hit a button that says request access, and we send you an email and we go, hey buddy, here's access. Here's a quick Jupyter notebook. Go for it. Right? So we're really, our at least within our team, we're trying to be as self-service as possible And AI is going to help us to just accelerate that. So it won't be a Google search and catalog. It'll just be an assistant that you will use probably through Slack or something similar and have this conversation about that. What are some other data sets that I should be considering here? Where are they? Here they are. Let me permission those for you. So I really think it's going to unlock a lot of time for these folks, this talent that we've got to do great things. You know, we don't want to be spending our time looking through the service desk trying to find an answer to a problem we've already solved. Let's just let the AI do that. Rather, we want to be thinking about what other things can we be doing to make a PM go live faster, to your earlier point, right? But for BAM, it's happening everywhere, right? We've got ChatGPT, like a lot of firms. ChatGPT is available. We built our own proxy interface. We've got connections into a lot of the third-party, research and transcripts, and that's happening in commodities. That's happening in macro. The whole Fed speak thing, and what are they going to do? Yeah, that's there, and has been there for a while. And if anything, I think for our applied AI team, enablement's a real key. Anyway, that's our approach. It's really to try to democratize it as opposed to sort of hold it centrally. And I think for data, it's going to look like automation of support, onboarding, not only that, but then the processing of all this information. There's obviously a ton of internal information the firm captures, not just external sell-side reports or whatever. It's analyst notes that the PMs want to look at. They want summaries of what their analysts are doing. They have that, and different ideas along those lines.
What about, it's one of the things that I've noticed is that there's a lot of data outside of just the alternative data space. It's more fundamental to a firm. Like, what is the current positions and in historical positions?
Totally.
Where's the security master, and what is the reference data associating to instruments? Very accurate historical events and forward-looking events databases, and even on the investor relations side, where what is the allocations that investors have in a single fund or multiple funds, and just individual trade histories, commissions, expenses that you have for various different brokers. The kind of like the core blocking and tackling.
Yeah, all that enterprise and reference data.
Exactly. So how much time do you spend thinking about what is the strategy for this blocking and tackling data, operations, trading, risk, and how much in the more alternative data space, alpha type of data sources?
Well, so, somewhat unique to BAM's structure and having this sort of centralized data team is, we have a great partnership with our tech team. And a lot of that internal data is managed by them. So there's obviously a large operations team, sort of middle back office technology groups, along with front office, application development and technology teams. And so, it's a partnership in managing those things. Obviously, the firm has all that. We have to have it to manage. We have to have it to run. To your earlier point on AI, that's where ideas we've batted around, or we have actually at the time of this taping, we have a hackathon going in Chicago. We have about 50 people in Chicago doing an AI hackathon in our office, and a couple of the ideas were around investor relations. Like, can we give in investor relations that on that portal, can we have something where someone can just ask any question they want, get an answer that, without having to open up the PDF and try to read or Dimitri's commentary or whatever that, or perspective. But yeah, I mean, I think as we have been growing into these new strategies, enterprise data, referential data has really come back to the forefront. So a lot of the technology stacks that we had and have been using for the last 10 years, we've been refactoring or even replacing because we need to move faster. It also is the case where, when new strategies come in, you want to give them it's kind of the golden taxonomy that they can build their business off of. And so, making sure that we have good governance over what those taxonomies are. We don't want 18 different ways of talking about a a portfolio, or hierarchies, or risk definitions or buckets, and so, yeah, that's really been the approach. The approach has been to sort of identify sort of that golden view, if you will. It's a bit of a marketing term I get beat up on, but I do think that that's, that one source of truth that then we can expand those strategies on.
Mm-hmm. Yeah. What we spend a lot of our time on with clients is thinking through what is this taxonomy and this data model, so that we can give a PM what are all the names in your portfolio, what's your last 30 days P&L, what's your IDO volatility, what's your exposure to factors, but also what are your analysts saying about, what is their thesis? Can we capture that in 3 sentences that summarizes their research? What is the street saying relative to their thesis? Right. What's the next upcoming event? What are the KPIs that matter? What do your analysts say? What does the sell side say? And then what is the data forecasting around these KPIs? Right. In a single pane of glass. And once you have that data model, at least in my experience, then starting to put AI on top of it, it just does such a big unlock.
Yeah, right. So, and we have a similar pane of glass. Our, all the things you just covered, those bases. Our technology team has done a great job building those tools. Whether it's risk dashboard, we have a thing called idea tracker. That's sort of where the analysts, submit their ideas and do their relative rankings, and the PM can, view that along with, just as you said, just for the audience, we're talking more about equities, equity-centric kind of example. But I do think that AI will be taking a lot of that a step further. So, I don't know if you're thinking about it, but you can imagine, what do I need to do? Oh, I blew a risk limit. What do I need to do to get back into it? Okay, well, you could take this position down, or here's a different couple trade ideas that you could do based on
what your analysts are already saying.
What your analysts are already saying, exactly, and have that be suggested to them. There's a lot of the ideas along those lines getting developed.
Totally. And getting somebody that has the capabilities of working with a model or interfacing with the model, or at least understanding the APIs that you need to use that are off the shelf, connecting it to the internal data. And then lastly, there's an element of the context. Does the person that's working on that understand what a risk limit is? Do they understand how you could portfolio optimize in order to lower your risk exposure in a certain factor? And do they know where the APIs are to call it? And can they put that all together into a model or construct a prompt that contains that programmatically? But if you can do that, it's wow, I already know what the next step would be. If you give me the data, I can just I can define these series of steps that need to be followed. A lot of this is not rocket science. A lot of this is just kind of rinse and repeat of best practices that a lot of firms have developed over the last decade. So now it's just institutionalizing it, and instead of having a wet CPU, with just a person, just have a silicon CPU do it instead.
Yeah, that's right. Yeah, and I think probably the firms you're dealing with, and certainly within our firm and a lot of other hedge funds, the types of folks who are building those tools or have those interfaces normally have that context. Normally, if you're in the risk team, or you're even a developer in the risk team, you're going to know what risk models are. That's part of the qualification process to make sure that you know what an equity risk model is, whether it's homegrown or Barra or Axiom or whatever. Right. Fundamental statistical, you know those things. But to your point, I think once you can get, what we've found is, because we have those types of APIs, and because we have, again, a lot of transparency around data, I think that's allowed people to adopt things a lot quicker in the AI space. They're not trying to search for, okay, now, let me go to the S3 bucket and let me get such and such models, flat files, and grip it and rip it and see what happens. They can just, go through, programmatically go through the things that already exist and build on top. Yeah,
totally. Going back to something that you said earlier about COVID, and being a bit of a forcing function where you're taking data that historically might have just been focused in equities, or maybe just a focus of macro, or just a focus in commodities, because suddenly there's these centralized catalysts around when cities are opening up.
Right.
What is the efficacy of vaccines? That you have all these different strategies.
Announcements. Yeah,
exactly. All these strategies kind of looking at the data to tell them what's going on for the first time, and getting like a single maybe COVID dashboard or a single sort of communication coming from the centralized team that's forcing you to join some of these data sets together. And that almost being a catalyst or a transformational point for a lot of these central teams, where they were working a little bit in isolation for separate strategies, and start looking across all strategies that a given data point might be relevant for. Did you notice that within BAM?
Absolutely. Yeah. And I think, the way I sort of categorize those types of opportunities, it's, you're trying to find like a data arbitrage opportunity. Like if we can say that we can provide a data arbitrage for our investors, that's a huge win. And that could look like what you've described. It could look like building a better view on things as a composite from different groups or different ideas across the firm. That's something we do. That could look like trying to just collect data faster.
Mm-hmm.
Oh, I think we can get ahead of such and such if we just go web scrape that ourselves, and let's give us a 2-day advantage, or we can get ahead of that panel because we know it's going to take 3 days before we even want to look at it. Like how can we triangulate to get an advantage? And I think that's not enough time is spent talking about data arbitrage as one of the purposes of a data organization. Like our job as a data organization is to deliver value. And and you have to say it out loud. You have to say, what is value? Value is ultimately P&L at the firm. Okay. So, it can be hard to draw a direct line from an onboarding job to, or the speed at which you get a PM live to direct P&L. But that's okay. That you don't always have to have direct lines. You'll have a few direct lines. Oh, we went ahead and we rebuilt this in a point in time fashion. It doesn't exist on the street. 3 years later, now we've got something that quants can use. That's value created. That's real value created. That direct value. It can also be indirect though. Oh, we want to keep track of when an analyst goes, hey, I just made, whatever on that trade based on that prediction you guys gave me. Awesome. We're going to put that in our pocket and we're going to say, we just created some value. And then, we want to talk about that value that we're creating. I think it's important to do that because one of the things that, I try to emphasize with our team and even with myself is, being at a hedge fund is so competitive and there's so much competition, not only for your mind, but for your time, that you always, it requires somewhat questioning, a little bit of a questioning approach. You want to be really curious, but you also want to be questioning, will this actually make an impact on P&L? Or is this just kind of like someone's request, And I think, BAM does an amazing job allowing us to have that conversation where it's not some political debate or whatever. On the ground level and in our day-to-day, I want our team to be thinking about, okay, everything I'm doing today, I know has some tie to value. It might not be direct. I might not be able to say exactly what it is, but the fact that we're trying to speed onboarding, the fact that we're trying to improve data quality, the fact that we're trying to build different predictions, all of that has a tie to it. And I think, great data leaders, which I'm trying to evolve into at some point, need to keep saying those things out loud because that's ultimately how people judge your organization. Our job isn't to just be some isolated engineering group, Yeah.
One of the things that I would do is I would have the data engineers on my teams have an end of year goal requirement that they have to identify 3 profitable trading opportunities that came about directly because of something that they built.
Right.
And
I love it. Yeah.
It wasn't necessarily easy for them to have those conversations when previously we had never had them. But by putting the onus on the engineer as a end of year goal. They have to document it. They have to interface with the PM and really pull that information out of them. It was a really effective way to scale that to 20, 30 people, all now realizing that they have a requirement to demonstrate on their end of year review that what they're working on is actually helping us make money.
Right.
And
absolutely.
Yeah.
I think it's easy to fall into just, we're working really hard.
Yes.
Of course you are.
Everyone's working hard. If you're not working hard, you wouldn't be here in the first
Exactly.
place.
Everyone is. And everyone's really, really bright. Of course they are. I love that. I love that idea because I think, again, it's setting the mindset of everyone in the team to think about the ultimate goal, which is to make money for our investors. Like, that's who we can thank for everything that's happening here. And so, I love the idea of being able to look at like 3 trades or something else. I give them a little bit, we try to give them a little bit more. If you're on an AI team, we have the same kind of goal. Okay, our AI team is, the budget for that is X. We want to have at least a 5X return. And if you're in Google, there's the 10X. Don't do anything unless it's 10X. That's the right thing. We want to be able to look back on this and say, like, we have delivered at, 5 to 10X of what, you've entrusted to us in P&L. And it's not always a direct line, but I think it's exactly the right mindset.
So Carson, 2024 is getting off to a wild start. AI couldn't be going any faster. The way the technology is being deployed within asset management investment teams is going off to a blazing start. What about for you? Like, you're thinking about 2024 planning. What's the next year and roadmap look like for you and the team?
Yeah, thanks. Totally agree with the sentiment. AI is going to be a big piece of what we do in 24. We have a hackathon happening in Chicago, both for our internal tools, but then we're also going over to AWS and doing a bit of a deep racer competition with the actual track.
Oh, awesome.
And the car should be great. So if that's any indication, we're going to be spending a lot of time helping PM teams sort of integrate these tools, find the insights, but then also try to put in the right sort of guardrails. We spend a lot of time helping them understand sort of the limits of the hallucinations and, how to leverage that. So that's going to be a big thing. For a lot of what we do, PM engagement's core. So if you were to look at our 2024 priorities, the top line is PM engagement. We want to be tightly coupled with our investors because those are the types of projects we want to be building. We have a big thread on innovation. Hey, let's experiment, let's fail. I think everyone's trying to innovate in AI. We're going to do the same. We've got several machine learning initiatives associated with that with some of the quant teams. And then more broadly, I think, it's to continue to drive that value creation conversation. So we are pretty open around things like wanting data quality to be our brand. Like, we want people to stay at BAM and come to BAM because they think we have the best data quality along with the best AI, along with the best engagement. It's sort of that view. So we have several threads there for some of our emerging businesses that we're going to be spinning up. That and a lot of internal talent development, continuing to, make sure all of our engineers know how to use these tools. We flipped on Git's Copilot back in March of 23. Over 50% of the code that we're now submitting uses that or has chosen an option presented to it in, the PyCharm IDE or whatever. So I think at last look, over 85% of all of BAM's employees have touched and are using AI actively, i.e. not just, let me see what this does, but rather coming back to it each day or each week. Those are going to be the big investments. It's a competitive space. We're going to try to stay on the forefront of all the new tools and technologies, getting our compliance and legal processes even faster. That's often some of the larger poles in the tent just to qualify that, given some of the regulatory requirements that we have. Yeah, man, keep the people, keep investing in the people, keep delivering returns for our investors. That's the goal.
Mm-hmm. Quick question on the compliance and legal side is sometimes I've seen when I'm implementing a new solution that's third-party AI enabled at a fund that the compliance and legal side of going through the DD and checking off the boxes is like a new set of questions that historically haven't always been asked. How have you guys tried to speed that process up? Do you guys templatize now the questions that you're asking with AI? Is it pretty much the same types of questions you were asking when you were doing new data onboarding for vendor due diligence?
It's similar in process. Early in 2023, when we were trying to avail just ChatGPT to the firm, we brought together effectively a little SWAT team. Myself, our chief information officer, head of InfoSec, head of compliance and legal, and effectively went through a learning curve of, what was going to be needed. And the fruits of that were a rubric and kind of a framework by which we could apply to a lot of things. Is this coming through Azure? Okay, well, we're probably pretty comfortable with that. We've looked at Azure in several ways, and we're using Azure. Is this coming direct from a new model provider? Okay, that's going to take a little bit more time. And so by sort of categorizing and now having some technology and some things to build upon, we kind of know what can move fast and what can't. But we had to develop a whole new set of questions, and we still are developing new questions because these models are changing, or what vector DB do we want to use, and what is a vector DB? We weren't talking about vector DBs with compliance 3 years ago, so that's a new language that's had to be developed. But they've been great. They again, having point people in each of those have been key for us, and trying to understand the value that this can create. I think everyone sees it. So it's really just operationalizing that. But we came up the learning curve, and then the second half, things moved a lot faster. Yeah.
Carson, that was great. And with that, we're going to give it a wrap. So thanks everyone for tuning in to this week's episode of the Hedgineer podcast. Again, I'm your host, Michael Watson. If you have any questions, feel free to check us out on hedgineer.io. And until the next episode, take it easy.
Hedgineer.